Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Go ahead and hit that like, subscribe, and notification bell if you would please. And today is brought to you by Stock Up You. Stock Up You is going to be the top link below. Use coupon code LEARN for my Black Friday sale. Let's talk about these markets, okay? Let's talk about what's going on right now. The markets are absolutely tanking. They are tanking, tanking, tanking. Look at this. Right after the government reopens on this news, right after the president was talking about how much the stock market was up, right behind that, the market reopening, because you and I have woke up, all right? We'll talk about that later. Let's look at this. On the day, we can see the S&P is down by 1.5%. The NASDAQ is down by 2.4%, 571 points. And then we have the Dow down 584 points, giving up the 48K all-time high. So the all-time high that I was talking about on yesterday and the president was talking about last night, gone. And I got more bad news. Bitcoin is now at 98K at the time of filming this. 98, okay? And so we could see everything that's going on. Even with XRP's new ETF, it's down 1.5% and everything is going south. We got Ethereum back to 3,200. What's going on? Here's what's really going on. Fear takes over as rate cuts odds crash, right? So this is what's going on, good people. We got a report here, stocks, blah, 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 blah. And it seems like here it is right here, okay? There's Ron Albany, Chief Investment Officer of Lard North Wealth Management, said CNBC calling the day's pullback healthy. I know you guys get tired of me using that word, but a lot of these are part of, I think, AI narrative is at some point all this capital expenditure is going to actually manifest itself, right? So we know everybody's scared of the AI bubble. But here's what I want you to look at right down here. A sudden change in the interest rate outlook weighs on equity as well. Now let's go back and let's read this one together. Because remember, I told you guys that crypto operates well on low rates. And now we, of course, don't have one in November. We don't have a FOMC meeting this month, but we have one next month. Okay, you can see this historically when the Fed signals fewer rate cuts or even a pause, risk asset suffers. For example, a piece from this, it just shows you that it suffers. You can read this yourself, okay? And then look at this. The crypto market has struggled off bad news before, but it's this, the ultimate test of the bullish conviction. The question is no longer if the Fed will cut, but when. And this is true. I absolutely agree with that. Not if, but when. Will it be in December? That would be a Santa Claus rally for crypto. All right. And the truth be told, I believe now these guys' pay grade is higher than mine. I believe that we're due for a 50 basis point cut, 50 basis point cut or a half. All right. That's what I believe. Now, I will tell you this, that if the Fed is truly, truly focused on jobs, well, the job market is weakening with these numbers. One of the problems that we have is we don't have up-to-date numbers, and they may not release October numbers because of the government shutdown lasting so long.
Just answer my question there. Do you think that the markets really need the Fed to cut to keep steaming along?
Well, I think, right now in the short term, the enthusiasm at least taking off and backing away from the potential cut that everyone expected to be coming in December is putting the weakness on the market. But does it really need it? It really doesn't. The market has been factoring in a much better profit cycle, looking all the way through 2026. Of course, having easier financial conditions and more liquidity in there is going to help in the short term. And we do expect that through 26. But pausing or having a cut in December is more of a very near-term small hurdle.
So you heard that gentleman. He believes that it's not necessary for the market to continue to go up. I don't know that one. It sure would make it better if he did. And again, if the Fed is clearly, if he's measuring the economy, all right, inflation, those are his three major things: the economy, inflation, and now jobs, right? So he's trying to control inflation to make the economy better, but we have to have strong jobs, because if the jobs fall by a certain percent, then everything goes to plot, all right? And so I understand it's a juggling act, but again, I still believe that the Fed is 25 basis points behind. And so is a 50 basis point necessary to get this on track? No. But 25, I believe it is. So I'm going to disagree with the guy a little bit. So I don't mean that that's going to cause the market to go either way. But I want you guys to concentrate on this, okay? Now, this is the S&P 500, the SPY, okay? We could see that it is down, and that looks really, really bad, right? Really, really bad. But if you just go back for the week, we're actually up, good people. I know it doesn't look like it when you look at your portfolios and you see all of the red, but the S&P is actually up almost a full percent for the week. And let's look at the NASDAQ, because a lot of you have companies that are in the NASDAQ, tech. You guys are tech heavy. That's why it's going down. I have a lot of tech. That's why it's a lot of red. And so do most of you guys watching me. So if you look at it right now, it's down 582 points. That looks bad. But remember, when I keep saying, when in doubt, zoom out. As it pertains to the week, it's just giving back what it ran up. And we're flat. So the NASDAQ is flat. Right? So if you made no moves, if you didn't buy and you didn't sell and you just relaxed, your stock should look about the same if most of the stock that you have is in the NASDAQ. So when in doubt, zoom out. But what we do is we find opportunity to buy on dips, right? So this dip is still higher than this dip. But if you dipped from here, that's a 384 point dip. If you were here and you bought at this dip, look at that. That's almost 400 points on the NASDAQ. So that's going to really move a lot of your stock. Now, let me talk about one segment, and let's go into quantum computing, because like I said, it's overinflated. And then when we get days like this, I know it's red. Let's take a look. Yep, just like we expected. Look at that. That's down. That's really bad. Look at Rigetti, D-Wave, Quantum Computing, IONQ, and SoundHound. They are all down. And it just didn't happen today, good people. If you look at the week, it's really bad. Rigetti's down 23%. If you look at the month, Rigetti has lost half of its gains. Half. And I was beating the drum loud when I was saying that these were overinflated. I know a few decided to hold on, and that's fine. And that's cool if you're long term, but I'm just telling you it was overinflated, and we sold, right? I didn't know we were right at the top. It was just time to take profits. I'm not that good to know that we were at the absolute top. I'm not going to fake for you guys, but all I know is that if you really look, so this is what I want you guys to do. Understand what you're in. Let's take SoundHound out, though it's down a lot, right? And I just want you to get used to doing this, okay? So you have the, let's put in the NASDAQ, okay? And this is what I want you guys to get used to doing, okay? So this is tech. It's just small cap tech. And then if you really look, and if the NASDAQ is flat and these are down by this much, it's telling you something. It's telling you something without even going into deep charts. It's telling you over the last month, over the last 5 days, if the NASDAQ is flat and these are down by this much, it's telling you something. And even today, with the NASDAQ down by 2%, these are going to come down by more. Not just because it's quantum computing, because they're low cap stock that ran up exponentially, and you don't want to overstay your welcome. Let me look at a few things that we bought today. So these are easy for me, all right? Listen, a lot of people are asleep on ETFs, absolutely asleep, okay? So we have VUG, Vanguard, we got QQQ, and we got FundStrat. So this is ticker symbol VUG, this is ticker symbol QQQ, and this is ticker symbol GRNY. And we bought some today in Money Moves. Money Moves is going to be the second link below if you want to build strong portfolios. So here's what's going on. We could see now on the day, they are all down by 2%. Granny Shots is down by 3%. And Money Movers, I will be live the last hour of the bell today. Okay. And we're going to do some more buying, you know, and being patient after we buy. So join me live in Money Moves. Okay. So look here, if you go over the 5-day, here's why I'm buying, because it's still lower than it was in the 5-day. Am I loading the boat? No, because this could continue. But this is a buy range where Larry likes to just pick a few more, like a squirrel getting nuts for the winter, like they were doing on my roofs, shaking the trees so the little things can fall and roll down so they could store up. If you look for the month, Granny Shots is still down by 2.22%. So I'm going to buy more of Granny Shots, right? And then second, VUG, and then the least in QQQ. Why? QQQ is still tech heavy, and it could take a hit, a further hit. All right, good people. So Money Movers, I will be joining you live the last hour of the trading session. Okay. So if you guys want to join me in Money Moves, guys, this is Money Moves, right? Money Moves is where you get to see all of my plays, all right? All of my plays, my daily plays. Sometimes we just sit and we just wait. So if you're thinking that you want a hot option, 10 option plays a day, that's not what we're doing here. But we're building strong portfolios. Occasionally I do options. I will get into more, but that's one of the things that I want you to do. And then by all means, join us in Stock Up You. That's an entire university where you have it, Stock Up You online. I am running a Black Friday sale, and it is coupon code LEARN, LEARN, one-time payment, lifetime access to everything, okay? And in there, we have the options class in there also, and you could learn options. Now's the time to be learning options, so we want you to go to Stock Up You, get in right now and learn options, because eventually we're going to go into a segment where we're just steady going down. And I want you to be able to do puts. Then when the market goes up, I want you to be able to do calls safely with some knowledge and not just gambling. I want you to use some fundamentals and some charting, right? All right, good people. It is what it is. I know it looks really dim for crypto, but I'm still holding my Bitcoin. That's all I'm going to tell you. I'm going to still hold my Bitcoin. This is when it gets tough. And you have to make a decision. There's some times when you go, hey, I tapped out. My stop losses stopped me out. But this time I'm thinking about actually buying some more Bitcoin. And let me say this. I'm sorry. I'm trying to make this one short, but I need to say this. Someone's going to say, Larry, everybody's not like you. We don't have dry powder. Let me tell you something. Before I would stock up with Larry Jones, get this lesson. Like Tom Lee said on yesterday's video, please get this lesson. Pay yourself first. You should always have dry powder. Why? Every single time you get paid, you should be paying yourself first. That is financial advice. Now, what I'm about to say is not financial advice. I'm not going to tell you what to buy or hold. I'm just a guy on YouTube talking. If you pay yourself first, I give God his first, and then I take the rest, and then I pay myself first before I pay my mortgage, before a car note, light note, before I'm going out, before I consume anything. I pay myself first, and then what I can afford with everything else is what I do. And I want you guys to adopt that, because that's what the wealthy do. Poor people are taught to consume, consume, consume. And I want you to understand this. The further the market goes down, the more you need to be putting in. And so I don't mean putting all of that money to work right away. I was going to say piles of cash in my portfolios. And so should you. Keep some extra cash in your portfolios for days like this that may be even redder by tomorrow. Nobody knows. But all I know is I'm doing a little buying today, and tomorrow could recoup after all of this is gone. All right. All right, good people. That's where I'm going to leave it. Remember the 2 links below. Remember, use coupon code LEARN with Stock Up You, and join us in Money Moves also. The price will be going up soon because we're going to add more tools there. Right. So lock it in now. You'll never go up. All right. All right, good people. We love you. Live, love, laugh, and learn.